You're looking very calm. I don't think investors are calm this morning. A lot of swings in the futures. I mean, what are you seeing right now? What do you think about all this? You've been very, I'm going to call it bullish on the Trump administration policies. Are you maintaining that stance?
I am, and I think the strategy is been laid out fairly in a very straightforward manner. They want to end up in a cooperative place. They want lower tariffs all around. They want people to come to the table, and they are coming to the table. You have to threaten the sort of ugly outcome of being very uncooperative all around, and that gets people to the table. That's happening. Excited to see that happen in Japan quickly. Sounds like last night, as you reported, Frank, that the Chinese want to talk. That's actually a pretty big deal. I woke up to that one. The market doesn't seem to be as excited about that as I am, but we'll see how the day goes. Everything moves very quickly these days, so we'll see.
Quickly.
But I think I think we're going to end up in a more cooperative, fairer trading environment. The process to get there is threatening.
David, a more cooperative trading environment. You're talking about what the president's saying. Again, the president administration saying about 70 countries have come trying to negotiate. But what about what investors are saying in the equity market right now? We have the S&P approaching bear market territory, and also the bond market. We've seen a broad sell-off there. What about what they're saying?
Well, you're not going to get a resetting of the global trading arrangement or a resetting of our fiscal policies and lower deficits and lower debt without some pain up front to get the gain in the future. That's the no pain, no gain strategy. Again, I think there's been a lot of clarity on that model that they're pushing. So, yes, that's a painful process to unwind mercantilism. And really, Frank, I want to say this because I think it's important, and I've been, kind of pushing this through my brain for the last few days. I really think the strategy here is to unwind decades of mercantilist behavior by our trading partners, whereby there's export subsidies, import blockages, accumulations of assets, and a vendor finance effectively of the U.S. consumer. And I think it's worked out for some big companies. It's worked out to get some cheap goods, but it's really hollowed out the country and caused huge imbalances in financial markets through trade and budget deficits.
David, you're very focused on the potential of a long-term economic benefit, and clearly the administration is as well. But what about the short-term pain for investors? I mentioned some of the areas in near bear market territory, in correction, et cetera. But in general, sentiment is very low, and I think it's also low not only for the consumer, but for companies. CapEx spending is slowing down. Consumer spending is slowing down. How do the markets recover from that?
Look, this is tough, and there's a lot of ways it can go off the rails. It's not an obvious win, even in the long run. You could have this derail. So I'm not trying to be too Pollyannish here. I'm trying to explain where I think they're headed and why they're doing it. And I think it's a relatively admirable goal, but it's a difficult goal. It's like taking a patient off a drug that they've been on for decades. You've been on this drug of fiscal largesse. You've been on this drug of imbalanced trade that has benefited a few but hurt many. And I think it's tricky to pull that out of the system. They're doing it. And there's a lot of people screaming about it, which means it probably has been very imbalanced. But
David, let me bounce something off you because we're almost out of time. I want to bounce something off you. So we got some news right now about an Apple supplier called Luxshare. They're in talk. You already know about this. So they're in talks to possibly bring some of their operations outside of China, I guess, in response to these tariffs. So let's say we continue to see that. Countries coming to negotiate, companies themselves complying with what the president wants. Then where do you put money? What benefits? We often talk about the stock market being a long-term discounting mechanism of what's going on. Who's going to benefit, and where does the money go in anticipation of that if you really believe that's going to work?
I think at the end of the day, you're still going to see returns on capital in the United States be some of the highest anywhere in the world. We are the place that treats capital the best. We have the best returns for human capital and physical capital on the planet. It's why we had the exceptionalism we did, and I don't buy that it's over. I think it's the end of mercantilism, not the end of exceptionalism.
One last quick question, David. We got to go. 10-year auction coming up. If we see fewer foreign buyers, does that shake up your view of all this?
It gets messy fast. Frank, that is really the linchpin. This is a trade war. And if countries can use their stock of U.S. financial assets that they've accumulated during this mercantilist activity, then they can create some problems.